Hey guys, how's it going? JD here. It is October 19th, 2023. This will be our price action work study lesson for the day. And so just starting down here at the bottom, I made this first entry blue because I can't really tell what was going on. But if you just look at the low, push up, higher low with this nice signal candle, that's a go. 1, 2, 3, but you barely win. But it also kind of looks from here, it's the first entry, second entry long. Not the best kind, because I would have rather this to break lower, but so that's why this is blue. I'm not quite sure what was going on there, but once we get above the EMA, you clearly got a low here, push up, come back, higher low. Now this is a beautiful signal candle right off the EMA, closed on its top. That one is clear. I like it. 1, 2, 3. That's a win. Then you got the push up here. And this is actually looking like a first entry. Guess you can count this a low, push up, high, another higher low. But this typically would have been a signal candle. This is really I'm gonna leave it. This is a first entry though. This is definitely a first entry. And then from this high, we start counting, push down, first entry, push down, second entry. Another kind of duddy signal candle. But it did break lower. That's a really small candle. That's a really small candle. In hindsight, we see it works, but this one I'm a scratch because I know I probably wouldn't have taken this. I probably wouldn't have taken this. That candle's just too little. Hindsight, yeah, it would have worked, but live trading. But now once this pushed up, once this worked though, once I felt like the second entry had worked, I would have taken this higher low right here. This is a nice candle. 1, 2, 3. But you would have needed to come back win to do it. So I would have been starting to be a little bit more safe. Like, maybe I need to be safe. Now this one I marked blue because typically I wouldn't take it because at this point we're too far away from the EMA. We've had 4 good wins right here. 1, 2, 3, really 5. So the further away we get from the EMA, I will start thinking that we're pulling back. But what I wanted to point out for you guys today is you're probably wondering why I never draw trend lines. And it's because to me, the safest trade is always off the EMA, near the EMA. And so the EMA, a lot of times will run the same direction as the trend line. Look at this trend line and look at the EMA. They're running parallel. So usually I don't need them. Also, I found that trying to teach people how to draw trend lines, you're gonna do it wrong. Because honestly, I can't say that I do it right because I've been taught 3 different ways to do it. So that's my theory on trend lines. Just use the EMA because the best trades are always off of it. But the reason I drew this trend line today, because if you had have used the trend line, you could have taken this entry. Even though it's kind of a first entry, this is a clear trend now. A clear good trend, and you're bouncing right off the EMA again. In that case, when you're in a good trend, you don't have to wait for second entries. If you get good higher lows, every little pullback in a strong trend, the rules change. So if you're in a strong trend, the trend line will serve you well to know when to go, and you can go here and you can go here. And this is actually a first entry, second entry long right here. That's a lot of stem on that one too though. But this one is a trade that I normally would miss out on because I don't draw trend lines. And I've just accepted that I'm gonna miss out on some to make sure I just grab the best ones. But if you're used to drawing trend lines, you could catch this one because it bounced right off your trend line, and that's a nice candle. Almost closed on this top, got rejection. That's a nice hammer up in my opinion. So if you did draw the trend line, you could catch this one. This one is a little shaky on that signal candle, but even if you took this one instead, 1, 2, 3, you still won. Then we got the new high here. And the market did something weird. It just dropped all the way down, made a leg without, you don't get no second entry here. So taking any of these is just out because you didn't get a second entry. You would be thinking that this is the first leg. So you got to sit on your hands. But as it keeps going and gets above this EMA, when you see this low, push up, higher low here, and this candle breaks higher than everything and gets above the EMA, that's cool. I like that one. 1, 2, 3. Then we got a high here. You got to push down, first entry, push down, second entry long right here. Closing above everything over the top. Take that one. 1, 2, 3. Or you wait because you skeptical of this big old candle and you get a low, push up, higher low, and you bounce right off the EMA right here. Another little hammer up. These little hammers up today. That's 1, 2, 3, 4. So again, the market is rhyming. You got to see what it's showing you for today, and it's showing that these little hammers up is cool today. It's the market does that. And then you take off. All right, and then you get another push back. First entry, push down, second entry long right here, close higher than the one to the left. You take this one and boom, 1, 2, 3. Then you get the low, push up, higher low. This one close higher than this body. You take that one again, boom, off to the races. Then you get one last one right here when you see all this rejection on this stem, and then this one close on this top, and you know you got a target of right here at least. I like that one too. Boom. And that's a win. Then you get this high, you get to push down, first entry, push down, another second entry long, huge candle right off the EMA, close higher than the one to the left, close on this top. I like this one too. 1, 2, 3. Now, here's where I came into the market. And this is where today I lost today. And it's a prime example of why you have to trust the market cycle, why you have to trust the rule of two. Today's loss is not going to be in vain, because I'm going to show you exactly why you have to trust chart reading, why you have to trust the market cycle, why you have to trust the rule of two. So when I came into the market, I watched this win and I watched this win. I hadn't pulled the trigger yet. I hadn't taken any trades, but I watched this one and I watched this one. But when I look back, I clearly saw that we had a trend up, a trend break, one pullback, 2 legs up to a new high. That means this market cycle is over. Okay, market cycle is over, so I should switch my mind to start thinking that we may pull back short for a little while. Also, this was a humongous run up, so I know, let's just think fibs, that we're going to get at least a 38% pullback, a 50% pullback, or a 61% pullback. We already know this, especially on a good strong run like this. I already knew that if I had to put a fib on here, I would have known how long to stay out the market if I only want to go long. But what the better thing to have done was to start looking for the signs that we're going short. But I didn't do that. You know why I didn't do that? Because I looked at the day chart and it was an up day and the candle was still small. And so I said, hey, this thing could keep going for, I don't know. You know, trends keep going. You never know how long a trend gonna keep going. This is what I'm telling myself. But I already know this market cycle is over. So at the time of day that I started trading, I had already missed a good move. I had already missed all these setups that I love to take. I had already missed them all. But I stuck with going long. And so I saw this first entry, second entry long. I mean, this is one of the cleaner ones out of all these that happened. Out of all these second entries that happened, this is by far. You can see 1, 2 legs back. Out of all these second entries that I was just trying to count a minute ago, this is the best one. But guess what? I lost 1, 2, 3. You know why I lost? Because the market cycle was over. That trend was over. I already knew that trend was over. But I went anyway. So see, you can have a second entry that's perfect. But if you take it in the wrong context, it's not going to serve you. You have to take the right trade in the right context. And this context was already, the market was already showing me that we're about to do something different. Even look at the EMA. When I actually entered, that EMA is flat across. It's flat across. EMA was trying to warn me. Here's the other warning shots. We had the new high. We pushed down, came up. This is a high, push up, lower high, boom. This was a sign. You know why this was a sign? Look at this candle. This is a hammer up. And this next candle didn't care whatsoever. It pushed down strong and closed under the EMA for a high, push down, lower high. So that was a sign. Not only did it do that, it would have won. If you had taken this, 1, 2, 3, you would have won. So let's just count up the evidence. We have a lower high that won. We have a trend up, trend break, 1, 2 legs up to a new high. This market cycle is over. That's number 1. Then we got the high, push down, lower high that worked. That's number 2. So that's 2 reasons. Oh, and then the EMA is straight across. 3 reasons. There are 3 reasons for me not to take this second entry long. 3 of them. But I looked at the day chart and I had a bias to go long. I also had a bias to go long because I had just watched 3 wins right here. That's on me. You have to take the right trade in the right context. You got to switch your mind. All right. Then, so the proper trade would have been, if you didn't take this one, then look what you get. You get another from the bottom. First entry, push down. Second entry, short, right off the EMA. Decent candle. It didn't close. I almost tipped lower than that one, but boom. 1, 2, 3. Now at this point, we're going lower. We're under the EMA. 2 short setups have worked, right? We're heading lower at this point. Guess what I did? See this humongous, beautiful candle? Trap candle all day long. I just said in a video, when you get that big, huge candle that comes up out of nowhere and closes above the EMA, the next candle is going to go back. Didn't I say that? I just said that the other day. But what do? Took it like a dummy, got trapped, and boom, they off to the races. Off to the races. We already knew we've had a trend up, trend break, 1, 2 legs up. We should be going lower. EMA is going straight across. We've already had 2 successful short setups. So at this point, we're not even to this first target. Or maybe we did hit the first target. That's why I kind of thought maybe we was going to go back up. But yeah, we got to hit this target, maybe this target, get somewhere in here before the uptrend would even start. You got to think fibs. It's going to be a 38% retracement, 50% retracement, or 61% retracement. In this case, it ended up being 100. Came all the way back. And then it shot back up again, just like expected, because it was an up day. But you got to stay out, either stay out of the pullback, either stay out of the retracement or trade the retracement. One of the two, stay out of it or trade it properly. So I was dumb, got caught right here. But then I woke up like, oh, that was so dumb. And I did catch the high, push down, lower high, beautiful signal candle close on the low. You know, I turned it around right here and got that, but not after giving away 2 gimmies that I shouldn't have. You know, 2 that I shouldn't have. But this is the home run. Then we drop down here. Then we get a first entry. Boom. Second entry short, right off the EMA again. This would typically be your signal candle, but it dudded out on you. Then this one, not a great candle, so you may still skip this trade altogether. But if you take it, I understand, because it's right off the EMA. Little candles, and your target is here and down here. So you take that, I get it. Boom. Then you get the first entry, pull back, second entry short again. Now this one looks great. You got rejection, closed on this low. That's a falling hammer. I love falling hammers. 1, 2, 3. You get the comeback win right there. Bam. Then you get the high, push down, lower high. And you see this candle up? It look all good and strong. You should think prices could keep going, and they do. And then when you see this rejection right off the EMA, another falling hammer. You take that. 1, 2, 3. By the way, have anybody noticed we got more falling hammers? Falling hammer, falling hammer. That was the only one. Then these hammers up. It was the hammer day today. That's what the market was showing you. Take hammers. Hey, It was telling us what to do all day. It was telling us what to do all day. Take cameras off the EMA, and you would have won all day long. Then you get this high, push down another lower high. Broke higher, trapped everybody going long again. Drop down. Boom. There you go. There you have it. Now, at this point, when you get this big push here, you might start thinking like we're probably at 50% at this point. So if you take this one, I didn't mark it. If you take this one, though, I get it. And that one would have won, finally. And then you get to push up here. You definitely don't take this. Too much warning shot. Warning shot, warning shot. So there's nothing in here. So unfortunately, you don't get to take this first entry, second entry short right here because it was just too many warning shots right here that we could be going higher. But then prices break right back down under the EMA again. And you may take this high, push up, lower high right here. Actually, I didn't see that one. I missed that one. Yeah, you can take that one. 1, 2, 3. And then you push back up again. This is just a first entry. Can't take that. But this high, push down, another lower high. This candle is right off the EMA, close lower than the one to the left. You take that one. I don't know how I missed this one. 1, 2, 3. That's easy money. Then you get another high, push down, lower high, and one more. Now at this point, you're thinking we're going to test here. We're definitely headed down here. So you take that and that one gets you basically down there. That's the day. That's what I saw. So my losing day could have easily been a winning day if I had just accepted the signs I saw, because I saw them. But nope, I wanted to keep the bias of going long. But I clearly saw and read the signs. So that's on me. I have to trust the process. I have to trust the market cycle. I have to trust the rule of two. And I clearly saw, these wins that I probably could have taken in here that I didn't, that I just watched, that probably set me up to take some of these bad ones. But again, now this first one, I'll take that every day. But you got to take it in the right context. So that's why I lost. This one here was me. This one here was me being dumb. I should have never, ever got caught right here. Yeah, I don't know I know not to take that trade. I don't know what I was thinking. It's not even a setup. It's not a second entry, really. It's not a high or low. Whenever you take something that don't have a name on it, you in trouble. You are in trouble. Whenever you take a setup and you can't stamp a name on it, you can't call it out before you take it. You can't say, here's my high or low. Here's my lower high. Here's my second entry. Here's my breakout pullback. Here's my rally base rally. If you can't say that before the trade, don't do it. Don't do it. But that's what I saw today. And hey, I hope this all helps you guys. Looking back at it, it helped me. I bet you I won't take this big sucker candle tomorrow. And so yeah, let's get into the trade example. Thank you for staying this long. I have a bonus as usual. This is a great time to like, subscribe, and share. And let me throw this out here too. I looked at my analytics yesterday, and hey, for all you people out here who have binge watched 4, 5, 6 of my videos and you haven't hit the subscribe button yet, what are we doing? What are we doing? How many dates we got to go on before you make a commitment? I'm saying I'm making a commitment to try to bring hot fire work study lessons every day. You can't put a ring on it. Hit the subscribe button. I'm just saying, you done binge watch 4, 5, 6 of my videos. What are we doing out here? What are we doing? Can I get a commitment out here? That's all I'm saying. Can a brother get a commitment? All right, go and hit that subscribe button, hit the like button, and hit me with a comment. All right, so y'all tripping. So hey, if you liking this content, you know what I'm saying, and it's helping you and you're getting better, write in the comments today, committed. All right, I don't know how to spell it. I'll spell it out later on when I do the video. Committed. Put that in the comments today. You know what I'm saying? Because we're committed to get better. We're committed to put in these work study hours. We're committed to put in these chart lesson hours. We're committed to tune in every day to learn from each other and to get better. We're committed to this journey, and we're going to make it. All right. So let's get into that trade example. Thank you guys so much. My name is JD, and as always, I wish you increase on the Sutton. Bye-bye. Man, that was a bad call. I don't know what I was thinking going along there. But this high, lower high, this is a huge signal candle right off the EMA. This should be the one. We're definitely going lower now. Home run.
We would like to thank you for tuning in to another Increase episode with JD. If you want to learn how to price action trade, please visit www.jdhyder.com and you will find his brand new course, IOTS, Price Action Trading System. We thank you again, and as always, we wish you increase on the sudden.